Okay, let's see. So this is chapter 17, process cost systems. We already did chapter 16 where we did job order costing. So this is a different way of costing for different types of businesses that don't make, that don't really work by the job, okay? So the businesses that produce a whole bunch of the same type of stuff, they tend to use process costing rather than job order costing. So any food manufacturing plant where they're just making packages and packages of the same food or something would use process cost systems. Let's see if I can get my clicker to click. Aha. All right, so here's some examples. So like I said, the first chapter we looked at job order costing. So businesses like Disney, Nike, they do jobs. It's interesting. I would assume Nike did like a process because I figure they made so many, but I guess they make them in jobs by certain types of shoes. So we're talking about businesses like PepsiCo, they do soft drinks. Alcoa, they make aluminum. They don't make it, by the way, they mine it. It exists already in the earth. It's an element. If you're English, you call it aluminium. But in order to do that, you would actually have to put an extra I in there. So I think that proves that America is superior to England, that and the Great War. Okay, yeah, the Revolution and the War of 1812. Just saying. Okay. Hey, are we an independent nation? Then we did not lose the War of 1812. Okay. All right. Freeport McMoran Copper and Gold, which is the largest probably employer in our community. They also use a process system. Okay. Same thing. They don't make copper. They dig ore out of the ground and then they extract the ore from that. All right. So here's some pictures in case you're a picture-oriented learner to help you see the difference between the two. So in job order costing, we put direct materials, direct labor, and factory overhead, and then we put it into the different jobs, and then we add finished goods. With process costing, what we do is we put direct materials into one work in process account, then we add direct labor and factory overhead, and when we finish in that department, we move it on to another department where we add additional labor and overhead until it becomes a finished good. So it's just what we're doing is we're adding labor and overhead in multiple process steps, okay, rather than tracking it by job, okay? What this does is it gives us a single price for the costs of stuff all along the way because we're not making separate jobs, so we don't need to track our costs that way. And so I guess the main difference is you're going to have multiple work in process accounts. This business has a mixing department and a packaging department. So you'll have work in process mixing and work in process packaging, right? So it takes the raw materials, puts them through a mixing process, sends them on to packaging, puts them through a packaging process, and then sends them on to finished goods. Okay. Again, for me, it helps to just sort of think of it like a production line where the raw materials are moving from one department where they do something to it, and that adds cost into it. And then it moves down the production line to another department, does something to it, that adds more cost to it. And finally, at the end, we can calculate what was the total cost of this. This is pretty easy, except there's this whole issue of like, how do we figure out the value of work in process when we get to the end of the financial accounting, the accounting period? So there's something sitting there partway done. How do I know how much of the materials I put in, if I'm adding materials and stuff at multiple steps, and how much of the labor I've put in? That's where it gets a little confusing because you have to figure out like, oh, well, these are only 50% done relative to the materials and only 30% done relative to the direct labor that I'm going to add. And so that's where it gets a little confusing. That's going to depend on company to company basis. Yes, so it will depend on company to company and then just the actual process, right? Like when do you add some things, you do a bunch of labor up front and don't really add any materials to the last part of the process, and other processes you do a bunch of materials up front and only a little bit of labor, and then there's a lot of labor I mean, so it just depends on. Yeah. Yeah, no, I think about what they do up there. I mean, they're mining ore that is like less than 1% copper. And when they started that mine, they mined it out because at that point they had a smelting process and you had to have high percentage ore to get copper out of it. And I think a lot of people were kind of like, oh, they'll never be able to get any more out of that. They can go back to their tailing piles, things that had already had the ore extracted now. And with the electrowinning process, they can get copper out of it because they just crush it up into a powder, dissolve that powder in sulfuric acid, add water to it. So now you have a sulfuric acid with copper particles and other particles in it. And then they put an anode in there. Actually, it'd be a cathode because copper is positively charged. They run a current through it and it pulls all the copper up to it. It's amazing. I'm sorry, my mind is kind of blown at their whole process. If you ever get a chance to do the mine tour, go check it out. Just go stand by one of those trucks and be like, I feel small in the world. He gives you the rundown. All right. So a major document that we have to use when we're doing process costing is a cost of production report. Now I know I can see it in Yemili's face right now that the name cost of production report just sounds exciting, right? You're like, where's my life been to this point without a cost of production report? I think they need to jazz up the name of that report, something sexier, like, I don't know. I guess that's why it's called the cost of production report. So the first step is we determine the units for which we're going to be assigning costs. Then we compute the equivalent units of production. This is the confusing part. Then we determine the cost per equivalent unit. This is a continuation of the confusing part. And then we allocate the cost to the units transferred out and partially completed. Since this is confusing, I'm going to try to walk through the process. But like so many things in accounting and other things, I can explain it to you, but until you're like actually trying to do it, it'll be a little bit vague, right? It'll be like I think I get what you're saying to me, but let's do a, and that's why the next time we meet, we'll do a walkthrough problem. Hey, what are they called? Guided. Let me guide you. I'm no longer a teacher. I'm your guide on this little journey we call accounting. That sounds great, doesn't it? How does that sound scary? Yeah. So this is a company called Frozen Delight. I'm guessing they make frozen delights of some sort or another. Let's see. So here's their specifics. On July 1st, they have 5,000 gallons in process. In other words, stuff they were working on yesterday, June 30th, right? But that isn't quite done. The direct materials cost for those 5,000 gallons are $5,000. Apparently, it's $1 a gallon, direct materials. The conversion costs, remember, conversion costs is the labor we're putting in plus any overhead we're adding to it. The conversion cost for the 5,000 gallons is 70% completed. So, and those costs are $1,225. So the total inventory sitting there on July 1st that's in process is $6,225. Then during July, they make another 60,000 gallons. The direct materials costs were 66,000. So it was a little bit more per gallon than that. Direct labor costs for July, factory overhead applied in July. So the total production costs they have to account for is what they had plus anything they added in. So which adds up to a total of $90,000 they've got to account for. And what they're going to figure out is what was the cost of the stuff we packaged and transferred out of this department, or not, sorry, not packaged, we transferred to the packaging department. And then what inventory is left over at the end of July, right? And then that'll give them the number to start August with, okay? So that's the process. So first thing we have to do, step one, determine the units to be assigned. And so this is up to the individual business and how they do business, right? They might have different, different costs for, or different units for different parts of the business. Maybe you make 1 gallon buckets of Frozen Delight that you sell to consumers, But to sell to commercial people, you know, like restaurants and stores, you sell those big 5-gallon things, or you know what I mean? Like, but they're going to track their units by gallons. And so again, in real life, this is easier than in a class, because in a class, they've got to try to give you all this info. And you already saw in this first chapter that they have to give you so much info that in real life, you would just know because you were working with it, that it's hard. It makes these gargantuan word problems with all of this information, especially hard if your first language is Spanish, right? You know, because even though your English is amazing, you're still having to read in a language you didn't grow up reading, and that's hard. So proud of you, man. Proud of you. How many of you speak a foreign language? What do you speak? Spanish? Would you like to take an accounting class in Spanish? Heck no. I speak Mandarin. I would not want to take this class in Chinese. That would suck so bad. I've looked at going to teach in China, and I'm like, the idea of having to learn it well enough to teach it in Chinese at the university there. I'll stick. I don't need challenges in my life at this stage. I just need nice and easy. All right. So there it tells us frozen delight, a unit is a gallon of ice cream. All right. All right. So the mixing department is accountable for 65,000 gallons of direct materials during July. How do they compute that? Well, they had 5,000 gallons at the beginning of the month, received 60,000 from materials. So they have to account for that, right? And really all they're going to account for is how much of it they moved on to the next department and how much of it is still in process at the end of this department or this month, okay? So for July and for each period of time, what we do is we usually assign our costs to 3 groups of units, okay? Group 1 are the units that were in process at the beginning of the month. Group 2 are units started and completed during the month. And group 3 are units in ending process. This helps us to break down the costs in a way that's usable to us. All right, so here's what they did. The total units to be assigned cost for July are summarized. Okay, so they have 5,000 gallons that were in process. They had another 5,000 or 57,000 that were started, plus 62, or and then not plus. So the amount they had in process plus the amount they started and finished gives us the amount that they actually transferred out. Okay. And then their inventory at the end of the month. So if you see the ones in bold, you end up with what you transferred out of the department plus what's still there. And that has to match what you were accountable for in the beginning. Does that make sense? Once you've done it a bit, the flow makes sense. So I realize it's just a little different than what we've done before. All right, so step 2 then, once we have figured out what units we're dealing with, which is the ones we started with, the ones we ended with, and then the ones we transferred out, okay? Then we have to deal with this issue of equivalent units of production. And that's because the units that are still sitting there at the end of the month are not completely converted into finished goods. If they were, or not finished goods, but not completely finished for our department. If they were, we'd have transferred them out to the next department. And so to figure out, I mean, we know that there's, what was it? We know that there's 3,000 units worth of stuff sitting there, but to calculate their cost rate as of right now, to say that it's a full 3,000 units times their whole cost would be inaccurate because not all of the materials and labor have been put into them. So they're partial units. So what we have to do is deal with this concept called equivalent units of production, which is a portion of the completed whole units based on the materials and conversion costs. Remember, things we move out are 100% complete. That's why we've moved them out of this process and into the next department, okay? So this is only for the stuff that's left over at the end of an accounting period to figure out the equivalent units. So here's an example. Assume that a 1,000-gallon batch of ice cream at Frozen Delight is only 40% complete in the mixing process on May 31st. Thus, the batch is only 40% complete as to conversion costs. So we would say this 1,000 gallons has had all of the materials put into it. So it's 100% complete with relation to material costs. So we're going to say it's 1,000 equivalent units, but it's only 40% complete with conversion costs. So it's only 400 equivalent units. So when we have to figure out our equivalent units, we're breaking it into two things: material costs and conversion costs. So those products sitting there, work in process at the end of the period, can be any percentage of the way done with materials and with conversion, depending on our process. For this company, they put in all the materials, but only 40% of the conversion. Remember, conversion is the labor and overhead. Okay. So to compute the equivalent units for materials, it's necessary to know how materials are added during the manufacturing process. Again, so in this case, all materials are added at the beginning of the process. Again, the problem will have to tell you this. And again, that makes more words to have to deal with. So anyway, that's just a summary of what we've already looked at. Group one was stuff in process, started and transferred out, and then inventory in process. So we're there just showing us that the stuff that's in process on July 31st is 100% complete as it relates to the materials put into it. So we have 3,000 equivalent units relating to materials. But then for conversion costs, we also have to know how direct labor, yeah.
It's adding like to the total balance to be assigned, but the extra 3,000. That was the
right.
Even though the maximum amount they all started with was total 62,000.
Well, it was 65,000 they had to account for. And they completed 62,000 and sent on to the next one. So now there's 3,000 still in process.
Oh, wait.
They had 5,000 in process at the beginning and added 60,000 more they started on. And then at the end, they had transferred out 62, leaving 3,000. So that's okay. Yeah, those things always have to add up, right? Right. So to do the equivalent units of production for conversion costs, the same thing. We have to know how the direct labor and overhead are applied. So for this company, direct labor, utilities, and equipment depreciation are often incurred uniformly during processing. Hence, it's assumed that Frozen Delight incurs conversion costs evenly throughout its manufacturing. So what they're saying is these units that are sitting there still in production at the end of the month are only what they say. Oh, well, this one they're saying when they started, they were 30% complete. Then the ones that we started and completed are 100% complete, and we shipped them out. And then the ones left over at the end, these ones are only 25% complete. So again, we would say the terminology we would use is if there's 3,000 units that are 25% complete with relation to for conversion costs, we would say 3,000 times 25%, we have 750 equivalent units with respect to conversion. So it's a little confusing, but this is the terminology they use. We say in our inventory and process at July 31st, we've got 3,000 equivalent units with respect to materials and 750 equivalent units with respect to conversion. That's the terminology. I think there'd be a clearer way to say it, but accountants made this crap up, so you just have to live with them sometimes. My wife has to live with one, and that's tough on her. All right. All right. So once we know what our equivalent units are at the end of the period, yeah, Arthur. Correct. They don't have to match up because these are only partially completed. Now we could still match it up if we added one more line that was like amount yet to be completed, but they just leave that off assuming it's obvious, I think. Well, because the other 70% of that was accounted for in the previous period. Because right. When we do some examples, it won't be as bad as it sounds. Okay. All right. So once we've determined the number of equivalent units, now we have to determine the cost per equivalent unit. Okay. So again, we do this separately for the materials and for the conversion costs. Okay. So to find the direct materials cost per equivalent unit, we take the total direct materials cost for the period divided by the total equivalent units of direct materials. That will give us the direct materials cost per equivalent unit. We do the same thing for conversion, the total conversion cost for the period divided by the total equivalent units of conversion costs, and that gives us the conversion cost per equivalent unit. So do you want me to go back? So let me skip to this next one. So the July direct materials and conversion costs equivalent units. Remember, they were different. So this is, we had 3,000 equivalent units of with relation to materials, 750 with relation to conversion left over, which means our total that we're assigning for the end of the year is, or the end of the period is 6,000 for direct materials, 60,000, sorry, and 59,250 with relation to conversion. So then when we're going to find our cost per unit, there's our total costs incurred. So we're going to take the direct materials cost, $66,000 divided by 60,000 gallons is $110 per gallon. So there's the direct material cost, 66,000. So we take that 66,000 divided by the 60,000 gallons, the total equivalent units for the month, gives us $110 per gallon. We do the same thing with conversion costs to get 30 cents per gallon. Right here, direct labor plus overhead. Okay. Right. But this gives us a direct materials cost per equivalent unit and a conversion cost per equivalent unit, which then will let us apply that to not only what's still sitting there in inventory, but also apply that to the ones we've moved forward so that we can know what those overall costs are. Right. Would be the materials cost. And then the, what was it? 750, which was the percentage of the 3,000, right? And that'll tell us. So that way, because at the end of the period, not only are we doing managerial, but we still have to do our financial accounting. So we have to know the value for our balance sheet of the asset, the asset work in process inventory. Okay. Times 3,000. Yeah. We do 3,000 times 110 plus 750 times 0.3, add those up, and that would give us the work in process in the mixing department as of the end of the month.
Oh, and then like
right. Okay. So product costs must be allocated to the units transferred out and the partially completed units on hand at the end of the period. So the product costs are allocated using the cost per equivalent unit. You can see why Excel would be handy for this, right? Because you can set this up in advance and pretty much just, your boss thinks you're doing lots of work, but it took you like an hour. Okay, because once you have your worksheet worked out, you're just plugging in numbers. All right, so the total production costs to be assigned for Frozen Delight are $90,000 computed as follows, okay, or that we had to account for. So their inventory in process at July 1st was 5,000 gallons. Conversion costs were $12.25. Now the direct materials they added in, direct labor costs for July, the factory overhead, that gives us the costs incurred during July. And that's our total production cost, is what we had to add in to finish up the stuff that was in there at the beginning, right? Because we would have had to add additional labor to it to finish it up, plus all the stuff we finished. And then our units are assigned the cost as followed. We have group 1, what was in process at the beginning. Group 2, what was started and completed in July. We'd add those up, and then the inventory process, inventory in process at the end of July. So again, the 5,000 gallons of inventory in process in July were completed and transferred out to the packaging department. The cost of these units is determined as follows. So the equivalent units that were completed, we didn't have to add any additional direct materials costs. Why? Because if they were in process at July, they had already had all those costs put into it during July, okay? Or I'm sorry, during June, during the previous month. But we did have to add additional costs for the conversion. So that 450, so it was what was the cost of what was already there, which was the materials plus, I guess, 70% of the conversion. Then we added in another 30% of the conversion during July to finish them and move them out. That's the process. Right. So during June, they had already had all the materials in it and some of the conversion. So during July, all we had to do is add a little bit more conversion to finish it up. Yeah, that's group 1, the stuff that was left over. For group 2, pretty easy, because here we've completely completed these 57,000 gallons during the month. We started them and finished them. So then we just say 57,000 times the 110 materials cost plus 57,000 times the 30 cents conversion costs. Add them up. That's the cost of the stuff that we made, that we started and finished during the month. This is just the stuff we started and finished. So this is the stuff that we finished that had been started in the previous month. Then this is the stuff that we started and finished. And then, so this is the total cost of the stuff we transferred out to packaging, right? Group 1, the stuff that was already in process and we finished, plus the stuff we started and finished, total cost transferred out. And then finally, group 3, the 3,000 gallons in process, is the 3,000 gallons times the materials of 110, and then the conversion, which was 750 equivalent units, times the conversion cost of 30 cents per equivalent unit. So that's the cost of our July in process inventory. Right. Well, but remember, when we close up shop on July 31st, we're going to come back to work on August 1st, but we have to say what's there at that moment. I guess you could be like, hey, we're going to try to finish out everything always at the end of the month. Some processes allow for that better than others.
Yeah, I feel like
well, and so what's here is ice cream that's partially made. It's had all of the materials put into it, but only 25% of the process finished on it. So it could be still being churned or something. I don't know. I don't know what their process is. Yeah, it is. Because it was started and finished. So it has both the material and the labor and overhead all added to it for during that month. So you think group 2 is the ones that we did everything. We were able to get it all done during this time period. Group 1 is the stuff that was carried over from the previous period, and group 3 is the stuff we're gonna have to carry over to the next period. All right, to summarize, I know I told you this one's a lot. It just takes a little getting used to. Okay, to summarize, group 1 is 5,000 gallons with a total cost of $66.75. Group 2 is 57,000 gallons with a total cost of $79,800. So this line represents the total number of units we transferred to packaging and the total cost of that. And then group 3 is the inventory in process at the end of the month. And if we add that up, it gives us the total 65,000 we had to account for and the total cost of 90,000 we had to account for. And recognize that this product isn't complete. This is just the cost we're applying in this one department mixing. Now they're not being sent to the customer as a finished good, they're being sent to packaging, where which additional labor, so additional conversion costs are going to be added. Apparently, anyway, so this, remember, for some companies, it could just be 2 departments. Some might have a 27 department process, right? Some things are very, like making a car, all of those components being added as it goes down the production line. All right, so here's a final Excel spreadsheet version of cost production report. This chapter, we're using all FIFO, okay, first in, first out. If you think about it, this could be done with a last in, first out system. It could be done, there's an appendix to this chapter where it does it with a weighted average. We're gonna stick with FIFO, okay? Just because this is good for now. First in, first out is primarily used because most manufacturing processes sort of follow that. They get materials, they use the oldest materials first. And so most places use a first in, first out process. So they use that. So again, it just has the units, whole units to be assigned costs, and then the costs broken down, okay? I don't wanna make us sit here and stare at this forever. It's a little too tiny. Just know that this document, you'll see it during the chapter, is a summary of everything I just sort of explained, put onto a single spreadsheet. Again, you can see they have Excel set up here, and it does a lot of the math for them. So this is the number of whole gallons, and that's the total cost of all of them. So this is in gallons and this is in dollars. Yeah. Yeah. Yeah, on this one, instead of putting them side by side, they do the units up front, up top, and then the dollar costs down on the bottom section. All right, so here's the journal entries that you would see. Okay, this is important. This is part of the process. So first thing that happens is you purchase materials, including milk, cream, sugar, packaging, and indirect materials from a supplier. So the journal entry, I don't know why they don't have them offset to make the debit and credit clear, but they're going to debit materials and credit accounts payable. Then when the mixing department requisitions milk and sugar, 66,000, we'll debit work in process for mixing. Packaging is going to requisition $8,000 in materials, so we'll debit that. And then indirect materials, we debit those, and then we credit the materials account. Okay, so that's the journal entry that is going to move all those materials from the materials account over into the work in process inventory accounts. The way this is set up is the one that's not yellow is the debit entry, and the yellow one are the credit entry. They incur direct labor in the mixing and packaging departments. So we debit work in process mixing, work in process packaging, and then we credit wages payable. That's what the journal entry looks like. Again, These work in process accounts are asset accounts. They're inventory accounts. And so we increase assets with a debit, okay? D, we recognize equipment depreciation. So they debit overhead and then they credit my wages payable. I think that's a mistake. And it says recognize equipment depreciation for the mixing and packaging departments of $3,350 and $1,000 respectively. This would be, that's incorrect, okay? Accumulated depreciation. No, you want to say how much of this depreciation is on the equipment. You want to take any equipment being used for the factory processes and have its depreciation costs become part of the product cost. And then that'll ultimately become cost of goods sold when we sell the goods. Yeah, it's the expense. If you think about it, depreciation is just the cost of the equipment being spread out over the equipment's life. Instead of saying, I paid $100,000 for equipment, I'm going to take an expense all at once for it. We're going to say, we're going to recognize that as we use it, like you said, we're incurring some of that expense. There they apply the factory overhead to the mixing and packaging departments. So they debit the work in process accounts and then credit the overhead account. Then transferred accounts from mixing department to packaging department. So they're going to debit work in process packaging, so increase packaging, and decrease or credit work in process mixing. Again, as you do it, guys, it'll start to make sense. So don't, if you're like, man, this is a lot. Well, you're right, it is, but we can do it. We've done it all the way through accounting 1. We'll be all right. Transferred goods out of packaging to finished goods. So we debit finished goods, which is another inventory account, and we credit work in process. So again, all that's happening is we're taking materials, which is an asset, an inventory asset. We're moving it over into mixing, which is still an inventory asset, but it's a different inventory asset. Then we're adding costs, we're adding material, or we already did the materials, we're adding labor, and we're adding overhead. And when it gets finished, we're moving that over to packaging. And then we're adding more materials, more labor, more overhead. And when that's finished, we're moving that over to another asset account called finished goods. So that's all that's really happening here. H, we recorded the cost of goods sold out of the finished goods inventory. So they sold $107,000 worth of stuff, debit cost of goods sold, which is no longer an inventory account. That's an expense account. And we'll credit the asset finished goods, okay? Right, yeah. If this was a sale entry, they would also enter what they sold it for, and they record that as revenue on either cash or accounts receivable. But this is just the costs of what they sold. All right, here's the ending inventories of Frozen Delight reported on July 31st. Materials 6875. Work in process in the mixing department. Work in process in the packaging department. Finished goods. So on their balance sheet, they would probably have inventories broken out this way. In fact, if you see a lot of the way balance sheets are done now, like if you go to Yahoo Finance or whatever, it would just say inventory and it would say 22,125. It would have a little plus by it and you could click to expand it. And then it would show you the breakdown of their inventories. Sure. One last concept for this chapter, the concept of yield. Yield is just the quantity of material output you get for the quantity of material input, okay? So I think the example they have here is assume that 1,000 pounds of sugar enter the packaging department and 980 pounds of sugar were packed. So we would say the yield, the quantity of output, 980 divided by the quantity of input, 1,000, means they have a 98% yield. What's happening to that 2%? It's just lost in the process. Like if you're packaging sugar, some's going to spill. Is it worth it to try to like scoop it up off the floor and clean it and reuse it? Or do you just clean it up and throw it away? But a lot of times this sounds dumb, but a lot of times just measuring this can help businesses improve their efficiency. Again, when you go in as a consultant and you're like, you guys are dumping 10 pounds of sugar for every, say they have a 90% yield, they're dumping 10 pounds of sugar for every 100 pounds or 90 pounds they're getting packaged. You can start to say, well, why is that? Like, what is it about our process that leads to so much waste? And start to improve the processes. So that's what yield is used for. And for a retailer, it can even be like the percentage of stuff that we actually sell versus the percentage of stuff that comes in the store. The difference is called shrinkage, or shrink, sometimes they call it. And that would be stuff that's either stolen or breaks or gets rots or something, if it's like food or something like that. And so restaurants have a real problem with yield. It's one of those things that makes restaurants fail so much is spoilage, right? If you try to make every meal immediately when people order it, it takes too long. So they try to do certain things and make them ahead of time. And then you get to the end of the day and you didn't use it all. Do you just throw it away? Do you give it to the employees? If you give it to the employees, guess what they do? They start over making every day, knowing that they'll get that extra stuff given to them at the end of their shift. Anyway, yeah. So, but again, that's the intent of all this managerial accounting, is to be like, how do we take the number side of the business and marry it to the doing side of the business, so that we're using a data-based approach to improve our processes. Right, that's true. All right, so that's plenty for one day. Don't feel overwhelmed. On Wednesday, we'll do a guided problem. And this will be, you'll be like, I can't believe this seemed hard, because I'm actually excited about process costing. All right, have a great day. Remember who you are. Make good choices. What else? Be kind to strangers. Don't approach strangers. If you can't be kind, at least don't approach.